Should the IRS be snooping at our bank accounts? My guest says if the conditions are right, at least I think he does, yes. We're going to debate it today here on Jimmy at the Crossroads, coming to you in partnership with the Washington Examiner. I'm Jimmy Sengenberger, and we're getting started right now.
Come on, Jimmy, what you got?
Hello, my friends, and welcome to another edition of Jimmy at the Crossroads. It's good to be with you. I'm Jimmy Sengenberger, coming to you in partnership with the Washington Examiner as we dive in today to the policy proposal that Democrats are advancing in Congress as part of their reconciliation package that would enable the IRS to monitor bank accounts. Now, they've been adjusting the positioning on the level or the amount that they would be looking at from $600 in inflows and outflows to now $10,000 above wages for a certain group of people. I mean, they're moving those items into a different direction. What exactly are they proposing, and is this a good idea? I think my guest today seems to believe that this is a good idea, at least broadly speaking. Rick Newman is senior columnist at Yahoo Finance, and he returns to us here on Jimmy at the Crossroads. Rick, my friend, welcome back. It's good to talk with you.
Hey, Jimmy, and I don't think I'd characterize this as a good idea. I think I might characterize it as less of a bad idea than some other ideas.
Okay, so comparatively speaking to what? So what are the other ideas that you think are even worse than this one? Let's just start there.
Well, I mean, let's frame the problem first. The reason the IRS wants to do this is not because it just has nothing else to do and wants to know, how much money goes in and out of my bank account or yours. We have a giant problem, which is taxes that Americans, mostly wealthy Americans, owe to the U.S. government but don't pay. That's known as the tax gap. By some estimates, it's as high as $700 billion per year. I know some of these big numbers out of Washington, they just go over everybody's head. But if it's even 1/10 of $700 billion a year, that's a ton of money that people owe the government that they're not paying. It's not money that we think they should owe because taxes should go up. It's money that they already owe based under the current tax regime that they're not paying, that the IRS cannot get. So the question is what is the best way for the IRS to get that money? So if you can tell me a way that the IRS can get that money that's completely unobtrusive and doesn't cause anybody any heartburn, I'm all for it. But what the IRS and many tax experts are saying is if they could get access to people's bank records, in addition to all the other records they already have about people's finances, that would enable them to do a lot of cross-checking and figure out where there seem to be inconsistencies, which would help them figure out how people are hiding money. So, we're talking about tax aversion and tax evasion here. So you tell me, what's a better way to deal with people who don't pay taxes? And if it's better than that, I'm all for it.
Well, let's define the terms here. For example, in terms of tax avoidance, that's legal ways of lowering the amount of tax that you have to pay versus tax evasion, which are illegal ways. Go ahead.
Yeah. We're not talking about legal ways people lower their tax bill. We're talking about basically illegal ways. And I guess there are some delineation questions here. Is it technically illegal? And probably some of the methods that lawyers and accountants come up with, one person might think they're illegal and another might not. But that's what the IRS does. It adjudicates those things. And we do have tax court for people who want to appeal IRS findings. And by just about any measure, there's a very large amount of money that people owe that they don't pay. So we need to figure out a way to get it.
When we talk about the tax gap, that ties in directly to what's called the shadow economy or the gray market economy. And that includes not just what you're suggesting about rich people, but a hell of a lot of people who are on the lower end of the income spectrum. You mentioned this in your column recently for Yahoo Finance. Here's when the IRS can check out my bank account, mentioning, for example, parents paying babysitters and nannies in cash, waiters earning tips, reporting a fraction of that taxable income. Those are things that are included in that summation. So we're not just talking about rich people, to be very clear, but let's also get to the exact solution that they've proposed here and how it's changed. So the original idea was if you had $600 in bank account inflows and outflows, then they would look into your account or potentially examine what's in your bank accounts. What is the current proposal on the table? Because I know they've moved that up to $10,000 and have this wage scheme as part of it as well.
Yeah, I mean, we should point out that this is not even actual legislation yet. So these are just outlines of legislation. As you pointed out, the original idea was the IRS should be able to look inside any bank account with a balance of more than $600, and that basically meant every bank account, and they're just excluding, let's say, kids and inactive bank accounts where they're not going to find anything useful. That a lot of people said that seems way too low, and it is, in my view, it is way too low. I mean, let's stick to the point here. The IRS itself says the real problem is not people paying their babysitter in cash. It's not people paying a housekeeper in cash or a handyman in cash. That is the gray market economy, but that's not where we're losing a lot of money. I mean, there's just not much money there. The real problem is with wealthy people, and it's not. There's nothing inherently wrong with wealthy people, Jimmy. The salient point here is that people who earn most of their income from investments rather than labor simply have a lot more opportunity to hide their income. It's just easier to find tax dodgers when you do that. So that's who we should be going after. So, what should the cutoff be? I mean, I guess so. Now the talking point is, oh, nobody wants it to be 600, so raise it to 10,000. I mean, for purposes of getting this right, I say raise it to 100,000 or raise it to 1 million. I mean, so that you can give the public some way to clearly know they're not going after ordinary working people who are not the problem here.
So I just want to clarify something, because you talked about the wealthy using investments as a way to hide their income. Is that hiding? Like, how do you determine this? Because in my book, that is investing in opportunities that can help the economy to grow, create wealth, generate opportunities. I mean, it's not like they are literally just putting it into underneath a mattress and storing it there. If you're talking about these wealthy people, when you mention investment, I mean, that's a good thing. We want to encourage them to invest. I would get rid of the capital gains tax myself, but that's a whole other question.
Well, do you want them to be sheltering money in the Cayman Islands or Bermuda? Is that investing in the U.S. economy? Is filtering it through, half a dozen financial institutions so that nobody can track the money at the end of the day? Is that the kind of investment?
Well,
in the
I would
US
be.
economy
So
that
when
you're
we talk
talking
about the $700 billion estimate, I would be curious how much and how they determine that's what portion would be
Well, they
in the
don't know.
Cayman
I
Islands.
mean,
But I want to get to something more fundamental
let me
here
just
in terms.
point out, we don't know how much money we're talking about because it's hidden.
Sure.
The IRS can't find it.
Well,
So by definition, they can't. If they can't find it, they can't.
2
count it.
years
So-
ago, the IRS estimated that there was somewhere around, for a 2-year time period, $400 billion that we were talking, or $361 billion, something like that we were talking about in the 2-year time period of 2011 through 2013. And so it has, that number has changed. And then suddenly this year, they're like, the estimate's maybe more like $700 billion. The IRS commissioner said maybe we're talking $900 billion, somewhere around $1 trillion. I mean, I think it's rather outlandish, but it's beside the point in my book, actually. The biggest reason, Rick Newman, why I think this is such a bad idea is because what we are talking about here is using inflows and outflows in a bank account as a basis upon which to look at people's accounts, as opposed to particular surreptitious behavior. Even when the IRS audits for tax purposes, they have some sort of a basis to draw that conclusion based on the filings. Here we're talking about what I think would be a raucous and a heinous violation of the Fourth Amendment and right to privacy protections here when we're talking about looking at people's bank accounts based simply on the inflows and outflows. Is that something that really sits right with you for the government to be examining on that sort of basis?
Well, do you think it's right for the government to know how much money you make?
I mean, not
Down to the
really.
penny? Well, it does. mean,
I
the
know.
government
Certainly, you
also-
have to file in your tax returns, absolutely, and you should be honest about that. And you could check that against, say, employers' income, or rather, employers' expenditures based on the 1099 if you're an independent contractor, or your W-4, or whatever those data points are, cross-pairing or cross-referencing with an employer or whoever's paying you the money. But in this case, we're talking about something much broader, which is simply we're going to do a catch-all of anybody who has this amount or above, and we're going to examine those accounts. That, to me, is unacceptable and inappropriate.
All right,
and
you asked me a
unconstitutional.
question, so let me answer the question. So the IRS, for normal working people who have legal jobs, and get paid and earn most of their income through work, which is most Americans, and that's certainly almost all middle class and working class Americans. The IRS already knows everything about all the income you make because it gets reported to your employer, it gets taxed at the employer level, and all that data goes to the IRS. The IRS has a lot less information about wealthy people who do not earn the majority of their income from labor, from income that is reported to an employer, but they earn it through a whole variety of investments, which can be anything. So, I don't think anybody really argues with you, Jimmy, that, Jeff Bezos in 1992, when he took some savings and he put it into this startup that became Amazon.com. I mean, I think most people agree with you. That is the good kind of investment, but that is not what we're talking about here. We're talking about stuff that is, I don't want to use the word laundered, but it is moved from place to place to place. Money moved from place to place to place to hide it. And a lot of it leaves the country.
That's what the thrust behind it is. But Rick, that's not what we're talking about in terms of the policy. We're talking about a catch-all. Goal is to catch those people. But the policy or the approach would be to look at all of these bank accounts potentially, to examine them at anything above, in this case, $10,000. You suggest 100,000 may be better. You say maybe $1 million. You note in your piece about $400,000 and what that could actually mean for a married couple and how they might actually be living may not be what people would conceive of as rich, even though they are making mid six figures. So when we're talking about the situation of the government possibly looking at accounts for anybody, we're not just talking about $1 million plus, and especially look at IRS auditing. IRS, a couple of years ago, ProPublica talked about this. How the IRS was auditing poorer people at about the same rate as they audit the top 1%. The expectation that would not happen here for the lower hanging fruit for people who are on the lower end of the income spectrum, I don't see how you can follow that to that conclusion. First of all. Second of all, we're talking about, again, the government looking at bank accounts for a whole swath of people, not just the billionaires that you're talking about. And even if it was just the billionaires, I wouldn't think that that's appropriate for government.
So, Jimmy, you're having me on as your guest, but you're doing most of the talking. You could just have yourself on as your own guest and have the whole show to yourself. Okay, so here's my proposal. Instead of doing this from the bottom up, in other words, let's start by putting everybody in the barrel and say, and then raise the threshold above which you cannot audit these accounts. Let's start from the top down. Let's say you can only audit the bank accounts of people with, so there's a billionaire tax. That now looks like the Democrats might try to pass that. Let's use that threshold. Let's say the IRS starts by only being allowed to look at the bank accounts of people with $1 billion or more in assets. That's only 700 people. And then let's see how that works. Let's see what they find. Do that for 5 years and then report back. And if they actually do find hidden wealth, I'm not sure they will, but let's say they do. Then extend it down. Let's say, maybe we can go down. Now we can start looking into the bank accounts of people with $100 million or more. You're going to be talking about like an almost immeasurably small fraction of the U.S. population. What I'm getting at is to do this right, don't include everybody and then make exceptions for a few. Include almost nobody and target it at the people at the very top, and then tell us if it works or not at that level. So tell me what you have against checking up on 700 billionaires in the United States to see that they are correctly reporting their income and paying what they owe. Do you have a problem with that?
Yes, I do. And here's the problem and the reason why. It's because the basis for examining their accounts, private financial information, which, by the way, has been leaked from tax returns on to other sources, for example, that we've seen.
I don't endorse that.
When we're talking about the 700 billionaires or however many there are, you're simply using a financial basis of how much money they are making and or how much inflows or outflows that they have as a basis upon which to do a search of their private financial data. That, to me, is an overt violation of the Constitution of the Fourth Amendment. I don't think that is an appropriate basis for that.
So that's your opinion. But let's say Congress were to pass that law, it would be litigated, and it would the Supreme Court would probably decide definitively. Is it a violation of Fourth Amendment right to privacy or not? We would get an answer on that. And if it does it's not a matter of opinion. Let's test it. If it does turn out to be the Supreme Court says, yes, it is a violation of privacy, then the whole thing gets repealed and we have to figure out something else. But what if the Supreme Court says no? The government already has enough, adequate amount of information it needs for the purposes of taxation, which the Constitution does give Congress the right to do. The right to tax exists in the Constitution, and it's fundamental to any functioning nation. We have to be able to administer a taxation system.
Rick, first of all, I think the Supreme Court has often gotten issues wrong. Of course, when they make a judgment, that's the supreme law of the land. Jimmy Sengenberger is not in the Supreme Court. However, when I look at legislation that's proposed, I consider whether or not I think it passes the constitutional smell test beforehand. I don't think Congress should pass whatever and then say, well, we'll let the Supreme Court handle that.
But that happens to be the reality of how our government works. I mean, the Affordable Care Act passed with some questionable provisions in it, which went to the Supreme Court, I think 3 times or 4 times, and that settled the matter. We've had civil rights legislation that went to the Supreme Court. We had Citizens United went to the Supreme. I mean, these things. This happens all the time, Jimmy. I mean, you have an opinion that our government should work more to your liking, but our government democracy happens to be kind of messy. And there's, like 230 years of precedent for this is how laws get made. Sometimes they get struck down and sometimes they get upheld.
But you asked me, do I have a problem with this? And I said, yes. And the basis is I believe that this is an inappropriate basis upon which to search people's bank accounts based on financial flows or whether or not they're making a certain amount of money. I don't think that's an appropriate basis upon which to surveil bank accounts without any sort of standard. Without any sort of a specific suspicion about some sort of malpractice.
So it's really easy to be a critic and back down other people's ideas. So you solve the problem. Would you just tolerate the tax gap? Would you say let's cut the $700 billion by a factor of 10? Let's say it's only $70 billion that people owe that they're not paying. Would you just say, no big deal? Let them keep the money?
Yes. I mean, what I would say is use the enforcement mechanisms.
Tax cheating as a government policy.
No, I think in terms
because that's saying nobody should pay tax and therefore we should not have a government.
Well, so what I mean here is that I don't think we should go beyond what we already have as far as the tools available for the IRS to enforce tax laws. I don't think that we should be looking into bank accounts to catch $70 billion.
You endorse tax cheating then?
No, of course not. Of course not. I'm saying I don't think that there's some additional element that Congress should do.
Why are you okay with other people cheating on their taxes?
No, I'm saying, Rick. No, Rick. You asked me what would I do. What would I do is I wouldn't have Congress take another step. I think the tools are there sufficiently right now, and I also question the calculation and the basis upon which people are determining the tax gap.
Well, so your answer is you would do nothing.
I would do nothing more from Congress.
Okay, well, then you would just tolerate widespread tax cheating.
I would continue to have the IRS enforce the law as it has done with the tools and resources at its disposal.
Well, you're not solving any problems, Jimmy. So you're basically saying status quo is fine with you. Let's not change anything at all. I mean, there are people who think everything is fine. We don't need to change anything, but that's not what voters think en masse. And that is not what is driving the people who are getting elected. I mean, even your hero, Donald Trump, got elected because he wanted to change things. He did not run in 2016 on let's keep everything the way it is. He ran on let's shake things up because the system is not working for too many people. So you're just not speaking the people's language there, man.
So I think in regards to the concerns of people, certainly there's an issue that people are worried, the rich don't pay their fair share. But if we actually look at the tax data that has come out most recently here, Rick, and I was digging in a little bit to this, and there's some great breakdown. First of all, we're talking about $4 trillion for the first time that the U.S. federal government has brought in revenue in this past fiscal year, up from $3.32 trillion in the year 2017. So a lot more money is coming in, and it is coming from the rich, including, for example, Treasury data showing that the top 0.1% pay an average tax rate on all taxes of 32%, while middle-income households pay an average of about 12%. CBO data showing the top 1% pay an average of 32%, while middle-income households pay 14%. And the Joint Tax Committee data show that the top 0.01% pay an average tax rate of 33%, while middle income households pay about 14%. That's not to say that there aren't some examples where you will find a multi-billionaire or millionaire or whatever that is not paying what they're supposed to, etc. But if the basis upon which this discussion is had has to do with whether or not the rich are paying adequately, I think they are. And I think adding in a new element of a massive privacy violation is deeply troubling and unacceptable policy for the United States, especially based on the idea we're just going to look at inflows and outflows in people's bank accounts.
Okay, you're kind of lecturing me again, Jimmy. Not so much of a conversation, but okay, you got your facts in front of you. We still have a $2.8 trillion deficit. Do you have that factoid in front of you? So even though,
of course, the spending's out of control, including under Trump.
We have nearly the largest deficits we've ever had in history, especially as measured as a percentage of the economy.
Agreed.
And by the way, what has happened? Why do you think we have had $4 trillion in government tax receipts for the first time? Let's see. Two things happened in the last 18 months. We had $6 trillion of stimulus spending, which went straight into people's pockets, and they spent it, and some of that went into people paying more taxes because the government literally supported employment through the Paycheck Protection Program and other relief. And we've got a massive asset bubble fueled by the Federal Reserve because of the coronavirus pandemic. So, even so, we have a $2.8 trillion 1 year. That's a 1 year annual deficit. So if you think the rich are paying their fair share, then I guess you think that lower income people should be paying more to close that budget deficit. I mean, you can rattle off your stats, Jimmy, but what's your solution to a $2.8 trillion deficit?
I would dramatically cut spending and not add $3.5 trillion in reconciliation. I mean, I would personally.
The big four are Medicare. Go ahead, cut that. Medicaid, Social Security, and defense. Which one of those four you want to cut?
Well, so of course you have those issues, and that one. We don't have time for me to get into what I would want to do in terms of reforming Medicare and Social Security. But what I would say is I would not add in all of these new programs that they're talking about for starters. So I wouldn't spend the $1.2 trillion in infrastructure. I would vote against that. I would vote against the $3.5 trillion reconciliation, or $1.2 trillion reconciliation, whatever it is. And I would go through and I would cut a hell of a lot of agencies in the federal government, in addition to doing certain reforms to Social Security and Medicare that I really don't want to get into today. Now, would that, would that make a dent in the current debt that we have? No. Would it lower the deficit? Yes. And it wouldn't increase it dramatically.
We didn't start the conversation to talk about the merits of basically the Biden and the Democrats' plan. I think some of that's good, some of that's bad. In no way would I endorse the whole thing. Look, the biggest problem with the U.S. budget deficit is healthcare costs and entitlement spending. That is Medicare, Medicaid, and Social Security.
Yes.
Defense is the other big one. We could cut defense, but nobody wants to. I mean, that's just unpopular among both parties. So you can salami slice 10% or 20% off of every government agency and come up with, spare change, basically, by the standards of the federal government. Sure. I'm fine with people who say this is not the right way to raise revenue or address the problem. But if you're going to just oppose what people are trying to do, then you come up with your own plan. I mean, by the way, there are many ways to address this problem. We don't have to zero out the entire annual deficit, but we have to, to be stable, we probably have to shrink it by 60% or 70%. So go find one of these online tools that say, how would you solve the deficit problem? How would you do it? And then make the choices, and then say, if I were running for Congress, could I get elected on this platform? Cut Medicare spending by 30%. That's where the money goes. Cut Social Security spending. Old people are taking up too much money because we have the aging boomers. I mean, can you get elected on that? Ask yourself that question. That's the reality of these political decisions.
One of the big things, though, that I think as we wrap up here, Rick Newman, that I'm curious about. So let's say that Congress does have the $10,000 level in whatever final bill they actually craft, because you're absolutely right. The reconciliation bill is not a formal bill. They're still hashing out these details, including whether or not they even look at people's bank accounts in this way, or what the amount may be. If it is at $10,000, especially given that the IRS, we know, audits poorer people at about the same rate as they audit the top 1%, do you think such a proposal should get through Congress?
No, I don't. If a proposal would be written in such a way that would it would allow the IRS to basically go after the low hanging fruit. I mean, the reason that you pointed out the reason that the IRS does audit poor people at a higher percentage is because they are more likely to claim the earned income tax credit, which is complicated, and they make mistakes that software flags, and that triggers an audit. We should learn from that and put in some kind of ironclad provision that prevents. It should prevent the IRS from using these new provisions for going after the low-hanging fruit, simply because, that's a good example. People make mistakes on a tax return. I think there should just be an income cutoff. You could have it at the level of the bank account balance, or you could have it at the level of income. Income might be a better balance, but I would say put in a threshold that says you cannot use this against anybody who earns less than $1 million per year, let's say, from any sources of income.
What about the prospect?
If it's not in there, I wouldn't pass it. By the way, I don't think this is going to end up in final legislation for what it's worth. I think it's too controversial.
What about the prospect of financial data being leaked? We have seen that back in 2013, 2014, 15. We saw it in the past year with the leaks of tax returns. What guarantees are there when we know how the IRS operates as a government agency, and then you have flows from however they actually decide to enforce this and get the banks to report to the IRS and so forth? I mean, that's a deep concern to me, and I think a very legitimate one given the kinds of hacks we've increasingly seen.
I mean, leaking that data is illegal. That's a violation of the law, and
Still
you
happens.
are assuming that those leaks are coming from the IRS. I do not assume that, and the reason I don't assume that is because Congress has access to some of that data, and Congress, if there's the leakiest place in Washington is Congress. It's not the executive branch, and I don't have any inside information that I would know where that came from. But there are many members of Congress who could get that data and would have an interest in leaking it. So I guess all I can say is I don't assume that came from the IRS.
Well, but there was 2014-15, there was an online hack that resulted in 700,000 U.S. taxpayers' IRS accounts being compromised.
Right, that's a hack. So
right, and it's illegal, but it still happened.
There's a big difference between a hack and a leak.
Well, sure.
Am I opposed to hacks? Yes, I'm opposed to hacks. It's obvious that is obviously a giant problem everybody faces. I mean, we've had more problematic data than that stolen, including national security data that China and Russia steal, and nobody thinks that's cool.
But don't you open up to the greater prospect, not just for leaks, but for hacks of that kind of financial data?
If you collect more of it?
Yes. Especially in the ways that they're talking about the banks then going ahead and reporting to the IRS, or however that's actually done.
So in other words, if the IRS had new banking data in addition to all the other financial data, then the hacks could actually be worse. I guess, but then you could also do reductio ad absurdum and say, well, the way to minimize the risk completely is for the IRS to collect no data whatsoever, and then no one can hack the IRS to get anybody's data. They can hack tons of other places to get it, including the financial institutions themselves, which does happen. But let's also keep in mind that American citizens do have protections that in most cases make them whole when an institution is responsible for a hack that causes these people harm. I mean, this has happened to banks many times, in fact, probably many more times than we even know. And when it results in harm to their customers, it is on them to make the customer whole. I'm sure there are instances where that doesn't happen, but leaks are a whole different problem. And if you want to have a program on that, or 10, we could go down that rabbit hole.
Well, but when I look at this and I think, okay, you're not just talking about more financial data, you're talking actually about all the bank inflows and outflows into an account. You can't get more nitty gritty than that. And if you open the floodgates to the IRS examining all of these different accounts and whatever monetary threshold we're talking about, then you make it more susceptible for basically all financial data from relative to a bank account to be put out there. And I think that's deeply worthy of concern.
Well, it is worthy of concern, but you're acting as if the government collecting that data is the main problem, when in fact many of these hacks, probably most of them go straight to the institutions themselves.
But the government, if the government requires a bank to do this, first of all, you add a lot of compliance costs. We've lost a hell of a lot of small community banks. You could add significant compliance costs to those institutions, making it more difficult for them to afford to continue. But also, whether it's up to the institution or not, the government's forcing the institution to do this, putting more risks out there.
I mean, to me, that's kind of an absurd generalization, Jimmy. Banks are already highly regulated, and they're also highly profitable. Just look. You can look at the banking indexes. The KBW Bank Index, or any way you want to measure the profitability of the banks. One of the last problems we have in the U.S. economy is the profitability of banks. They are outstanding. They excel at efficiencies and at internalizing costs, and when necessary, pass them on to consumers. But we do not need to worry about banks being paralyzed by regulatory costs and one additional regulatory cost in this country. If anything, banks need to do a better job of fighting what you're talking about, which is hacks. And by the way, when you said, oh, it doesn't get more detailed than that, it's watching inflows and outflows of banks. It actually does get a lot worse than that, which is identity theft. Which is when not only do hackers can they see your inflows and outflows. Hackers don't care about your inflows and outflows. They couldn't care less. They want to steal your money. And I guess if they can see where your inflows and outflows go, that gives them a better chance to steal your money. But that's not the main way hackers get into accounts. So the real concern at the hacking level is not that somebody has your data, it's that they steal your money. And that happens.
I think there are so many different reasons why this is a bad idea. That's just one of them. I also worry about the politicization potential of targeting particular individuals based on politics. We have seen that in the past with the IRS. In fact, you recall the Lois Lerner situation with the IRS and Tea Party and other conservative groups. The Inspector General for the Treasury Department even came out with a report saying that they were specifically targeting particular groups. And I think that that's just an indication that you can see political abuse of this kind of authority given to the government. I seem to have far less trust in the government and, yes, in these institutions relating with the government than you do, Rick.
Well, Jimmy, I think it sounds to me like you prefer there were no government because you've got a problem with government at many levels. I covered the Lois Lerner situation, as you pointed out. It's not exactly as you characterized it, but unfortunately, I need to get off because I'm being beckoned to go on our own program at Yahoo Finance and talk about something different, which is the new social media company Donald Trump is starting. So I got to bail out.
Got to talk to you about that one as well. Rick Newman, Yahoo Finance senior columnist. Always a pleasure, my friend. Thank you.
Hi, Jimmy.
Once again, Rick Newman, senior columnist at Yahoo Finance, joining us here on Jimmy at the Crossroads. A very interesting discussion, to be sure, and he may well be hitting on an area of legitimate concern, whether or not there's significant amounts of tax cheating going on. But whether or not that concern requires a brand new massive solution or policy effort on the part of the all-knowing, all-powerful federal government is an entirely different question. Especially when we are talking about a particular proposal, and that is allowing the IRS to snoop on people's bank accounts based on the amount of money that they have, that they're bringing in, and or the inflows or outflows each year. The idea that the government would use that as a basis to search bank accounts strikes me as a fundamental violation of the Fourth Amendment, and one that we should not be waiting for the Supreme Court to handle, potentially take a case like that years down the line. It is an overt violation of your right to privacy, Fourth Amendment protections against unreasonable searches and seizures, for the government to simply use a basis of how much money you make, not a specific probable cause, some sort of particular reason or justification. Like they know you are engaging in some sort of illegal behavior, or they suspect that you are doing something along those lines. We also have significant concerns over potential leaks or hacks of data and information, and also politicization. It is a legitimate issue of concern for whether or not you give the kind of power to the IRS to engage in this activity and potentially see it done for political purposes. I mean, I don't understand how we can find ourselves in a position where this is okay based on all of those factors and many more. I think this would be a terrible idea. And no, I don't have a specific alternative for Congress to address this, because I don't think that beyond closing loopholes by flattening the taxes so that there's ideally one flat rate, that's what I would love to see, and simplifying the tax code dramatically, that's what I think you should do, as well as adjusting the tax code for less complexity, which would encourage people to make sure they get their taxes in and that they comply with the law. In fact, when we look at the globe, all across the globe, historical data shows us that less complicated tax systems encourage taxpayers to act as they're supposed to and discourage tax avoidance. In fact, the United States of America, I should have mentioned this with Rick, the United States of America has a significantly smaller gray market or shadow economy than the rest of the globe. Most recent data indicates only Switzerland is ahead of us among 197 countries in terms of a smaller shadow economy, and therefore more tax compliant. So, all things considered, I think this would be a horrible and disastrous idea and an overt violation of civil liberties on the part of the federal government. And it doesn't require some sort of solution that is specifically geared toward catching tax cheats so much as simplifying the tax code and encouraging more tax compliance, which would come from that. But a specific program, especially one like this, no thank you.